We are kicking things off with massive market movement. Alphabet Inc.'s stock price surged 2.9% on Wednesday, trading near $396.38, and we're diving deep into the analyst ratings that are shaping its future. Raymond James has restated a strong buy rating with a $425 price target, while Pivotal Research maintained a buy rating with a $470 target. Canaccord Genuity Group also upped their target to $390. We break down what this latest wave of research means for GOOG.
Tired of dropping your phone or struggling to hold it with one hand? The PopSocket's Pop Grip gives you a secure grip, works as a phone stand, and even lets you swap the top for a fresh new look. Simple, useful, and perfect for everyday phone use. Click the link in the comments to grab yours on Amazon.
Next up, we look at the staggering financial commitment driving this tech giant. Alphabet has just announced a massive global debt blitz, raising nearly $17 billion through euro and Canadian dollar-denominated bonds to fuel its artificial intelligence infrastructure. This move highlights just how aggressively the AI boom is consuming capital across the entire technology sector, showing a race against its own scaling. But the investment isn't just about debt, it's about hardware and control. Alphabet is pouring billions into its own AI infrastructure, aggressively developing its tensor processing units to compete directly with Nvidia. This strategic shift means Google Cloud is evolving into an AI hardware operator, making the battle for the next generation of chips the defining feature of this era. And finally, the ultimate showdown is here. Alphabet is closing in on Nvidia to become the world's most valuable public company. GOOGL stock is soaring, pushing its market cap close to Nvidia's, as the search giant proves its strength in cloud computing and its new custom processors. Don't miss the full analysis. Stay tuned right here for all the breaking tech and market news. Alphabet Inc. Nasdaq, GOOG, stock surged by 2.9% during Wednesday's trading session, reaching a high of $396.38 and closing at $395.498. Trading activity was robust, with approximately 22,086,121 shares changing hands, marking a 5% increase from the average daily volume of 21,113,697 shares. This rise follows a recent quarterly earnings report where the company posted earnings per share of $5.11, surpassing analyst consensus estimates of $2.68 by $2.43. Revenue for the quarter reached $109.9 billion, an increase of 21.8% year-over-year. Analyst sentiment remains largely positive for the tech giant. Research reports have been frequent, with several firms upgrading their outlook. Raymond James reiterated a strong buy rating with a $425 price target, while Pivotal Research maintained a buy rating, setting a target of $470. Canaccord Genuity Group raised its price target to $390, upgrading the rating to buy. TD Cowen also increased its price objective to $450, maintaining a buy rating. Overall, 6 analysts currently hold a strong buy rating, 28 have a buy rating, and 4 maintain a hold. The consensus target price across analysts is $362.73, with the current average rating being buy. Financially, Alphabet exhibits solid metrics. The company's 50-day moving average price stands at $313.83, and its market capitalization is $4.78 trillion, with a price-to-earnings (PE) ratio of 30.17. Key financial ratios, including a current ratio and quick ratio of 1.92 and a low debt-to-equity ratio of 0.16, indicate a stable financial position. The company also recently announced a quarterly dividend, set to be paid on Monday, June 15th, with shareholders of record on June 8th receiving 22 cents per share, an increase from the previous 21 cents payout. Insider activity shows some recent selling, with Chief Accounting Officer Amy Thuner O'Toole selling 617 shares on April 1st, and Director Francis Arnold selling 102 shares on April 30th. In the last 90 days, insiders collectively sold 158,553 shares, representing 12.99% of the total shares owned by insiders. Major institutional investors continue to show significant interest, with Vanguard Group Inc. increasing its holdings by 2% in the last quarter, and J.P. Morgan Chase & Co. boosting its stake by 1.1%. State Street Corp. And Auto Owners Insurance Co. also reported increases in their holdings. Alphabet, formed in 2015 through the restructuring of Google, remains a multinational technology holding company led by CEO Sundar Pichai. Its core revenue streams are dominated by internet search and advertising platforms, including Google Ads and AdSense. The company remains a significant player in the technology landscape, navigating ongoing market dynamics while maintaining strong financial fundamentals and positive analyst coverage. Alphabet has launched an aggressive global debt strategy, raising nearly $17 billion through the issuance of euro and Canadian dollar-denominated bonds. This significant borrowing is specifically aimed at financing the massive infrastructure required for artificial intelligence development, signaling an explosive funding boom across the technology industry. The move underscores the intense capital investment pouring into AI capabilities from major tech players. Alphabet is aggressively financing its AI expansion by issuing billions of euros in bonds on the European market, signaling a race against scaling. According to reports from Reuters on May 5, 2026, Alphabet placed a new 6-part euro bond with a volume estimated at least 3 billion euros. This debt issuance follows previous fundraising efforts, including approximately $32 billion raised through various bonds earlier in 2026. This substantial debt highlights that the investment in AI infrastructure is now consuming capital beyond what operating cash flows can support. The timing is significant, occurring just after Alphabet raised its 2026 investment forecast, which has been revised upward to an expected range of $180 to $190 billion, with analysts predicting even higher figures for 2027. A significant portion of this capital is earmarked for expanding Alphabet's AI infrastructure, focusing heavily on data centers, networks, power supply, and crucially, its proprietary tensor processing units, TPUs. Strategically, Alphabet is intensifying its efforts to reduce reliance on external GPU suppliers like Nvidia, positioning its in-house accelerators as a critical competitive advantage. This move aims to secure cost control and scaling capabilities. Furthermore, external customers, such as Anthropic, are increasingly leveraging Google's TPU infrastructure, transforming Google Cloud into an AI hardware operator with a defined platform strategy. This trend mirrors broader industry activity. Meta has also raised billions on the bond market, while Microsoft, Amazon, and Oracle are expanding their AI data center investments. Current analyst estimates suggest that global AI infrastructure investments could surpass $700 billion in 2026, up sharply from $410 billion in 2025. These massive expenditures are shifting perceptions of big tech, positioning these companies less as traditional software firms and more as infrastructure operators or energy-intensive industrial groups, leading to closer scrutiny from rating agencies and investors. The capital markets are currently supporting this expansion, provided that cloud growth and AI service revenues continue to outpace infrastructure costs. A critical emerging risk is the potential for overcapacity if AI revenue growth slows relative to infrastructure costs, which could render the current investment unsustainable. The true competitive battle is now shifting deep into the infrastructure layer: energy, chips, networks, and data centers, determining who will control the technology landscape for the coming years. Alphabet, the parent company of Google, is rapidly closing the gap on Nvidia to become the world's most valuable publicly traded company. According to Bay Street, Alphabet's stock has surged by 23% this year, fueled by the explosive growth in the artificial intelligence sector and its robust cloud computing business. This momentum has propelled Alphabet's market capitalization to $4.67 trillion US, placing it within striking distance of Nvidia's $4.8 trillion market cap. Nvidia's stock has seen a more modest 5% increase year-to-date. This potential realignment could see Alphabet reclaim the top spot for the most valuable public company for the first time in over a decade, having last held that position in February 2016. Alphabet is positioning itself as a formidable competitor, operating as both a major AI service provider and a direct rival to Nvidia in the microchip arena through the development of its custom processors. The search giant has recently stunned Wall Street with cloud growth that has significantly exceeded expectations, surpassing key rivals like Amazon and Microsoft. Meanwhile, Nvidia's market cap remains well below its all-time high of $5.2 trillion US amid intensifying competition in the chip market. Alphabet's stock is currently trading at $386.19 US, marking a 135% rise over the last year, while Nvidia stock is trading at $197.57 US, reflecting a 74% gain over the past year.